Welcome to this week's video. So, if you're new, uh, this is a gold forecast for, I believe, June, so the first week in June, and this is my video. Third video. Apologies for last week. For some reason, I just forgot to upload the video. And I would really appreciate it if you like the last two forecasts, then please let me know so I can keep doing this. Okay, so we are talking gold. I've got a gold chart right now. And what I'm going to do is I'm going to put on my lipstick. Okay, so here we go. All right, this is gold. I'm just using the forex chart, but this applies to any gold chart really. Above us, so above current price, so uh, close of Friday, we have these auction levels in red. So these are targets. And below price, we have these auction levels in green. Again, these are targets. So price is going from one auction level to another auction level. That's the basic logic. This video or the forecast videos are intended to explain where trades are likely to happen. So not when, but where. The foundational logic is two things. I'm trying to understand where a trade is going to happen, so the location, and then when it's going to happen. And this involves understanding price mechanics, things like breakers, liquidity sweeps, etc. Right? That's when. For now, we've just focused on where. Now, I use auction levels. Now, auction levels are just invisible lines on the chart. I like to think of them like equilibrium, but they're just simply invisible lines on the chart. And I start to hunt for trades in or around those auction levels. We've got one right here. So we talked about this auction level. What I did was I switched off the indicator just so that uh, there's not a lot of clutter. And instead I've just drawn these on. So these are auction levels. So we talked about this one. And I said I was weak bearish because we were slightly above the auction level. But as of today, because we've hit the auction level 3 times, 1, 2, 3, and then broken below it, I am now bearish, like fully bearish. So for me, my mindset has switched from where the trade is going to happen to when the trade is going to happen. Now, I could be completely wrong. That's not the point of this video. It's just to explain that just based on my own logic, we are at this auction level. We've closed below the auction level. Yes, we've immediately sort of retraced above it, but effectively the fact that we've closed below that auction level is effectively telling me that we are bearish. Okay, so unless I see action that negates that fact, then I'm now bearish. What I've also done is I have included these sort of trend lines, again, just for a visual cue, just to show that we are effectively going down. We have 2 touch points there on the lows, 2 touch points on highs, actually 3 touch points on the lows. Are we going to make a third touch point on the high? Maybe, maybe not. I don't think we will, but could be wrong. We've got this auction level right here at 4,600, give or take. Now, I expect that to provide resistance going into next week, the first week of June. And then I will start to look for potential trades. The other thing that I'll mention, don't think too hard about this part, is I use a model called a two-step model. Don't worry about it. It's simply XAB leg. That's all it is. If I take a fib and I run it from this high to this low, uh, I can see that price is inside the kill box, my kill box. Don't worry if it doesn't make any sense. I have lots of videos that talk about the two-step model that gives a very basic idea as to what it is. But basically, price is going from a point of origin, which is your X, moves away to a point A. Okay, so that's one leg, and then it retraces. So it goes from A to B. Okay, And all I'm doing is looking for an entry around the B leg, right? The B point. Okay. You can do it like ABC, but I normally do XAB. But you can do both. And that overlaps with this auction level. That means this auction level, which I would have initially ignored because it's an internal auction level, is now very important. So price will either interact with it, you could just tap it, touch it, scrape it, sweep it, whatever. It also, as you can see, overlaps with that descending trend line going down. So I have high expectations for that zone. As you can see, there's also a fair value gap to the left of it as well. Um, so there's a lot of things happening there. If price gets above that descending trend line, then I become weak bullish. If we get above this auction level, this one right here, then I become bullish. Okay. Now the professionals, I believe, have 2026 targets at 5,000 to 6,000, which is above us. However, right now, going into next week, I am bullish. I am bearish. Okay, so I'm bearish. So my mindset has shifted from where the trade is happening to when. So what I'm looking for on a lower time frame now is price mechanics. I'm looking for something that fits my model. Okay, so this is where your model takes charge, whatever that is. Okay, but first I'll look for some kind of interaction with this 4,600, preferably, and then trade whatever I see next. So that's sort of me going into the first week of June. The targets are still the same, they haven't changed. So above us, we have these red lines, and below us. So above us, the nearest level is 5,000, and below us, the closest level is 4,200. So that's pretty much it for next week. Hopefully, I don't forget to upload this video. Now, if you got any insights from this, please like the video. And if you want to see more, of course, please subscribe to the channel. One other thing, if you want to see more of these specific types of forecasts, please let me know. Please let me know, because I do 3 different kinds of videos, and just based on YouTube's algorithm, I then decide sort of which ones to kind of do, right? I do ES videos or NQ videos, I do sort of gold videos, and then I do forecast videos. So let me know. All right. Thank you very much for watching. I'll see you in the next video.